Hello and welcome to another edition of the Stock Market Update. It is currently the 21st of October 2014, and I hope you all have been having a good day. On the podcast that was published over the weekend, I did speak about the rising trend line in the S&P 500 that was broken. And as you can see here, this is the trend line, and the market broke down below the trend line last week. We did, however, stay above the all-important support down by the 1800 level that we spoke about on the podcast. And this is very important because if the market closed below 1800, that would get us into bear market territory, which would not be positive for the market at all. So the market continues to remain above that all-important 1800 level on the S&P 500. Resistance currently in the market is up by the previous high. It's about 2010, and support is down below this 1800 level. So these are the levels that we need to pay attention to on the S&P 500. As you can see, the market is bouncing back pretty nicely, and we have basically saved ourselves from entering the bear market territory, but we have to keep an eye on the market. With the Dow Jones Industrial Average, we see a similar setup as the S&P 500, but the key support area in the Dow is down by this 15,400 level. This level would be the bear market level in the Dow, 15,400. Now, resistance is up by 17,400, and strong support is by 15,400. Taking a look at the Nasdaq, we see again the market is bouncing back quite nicely, and the critical support area that we spoke about on the podcast is down by its 3,400 level, and critical resistance is up by the 4,100 level. And as I keep saying, it's important to understand and look at these charts because it gives us clues as to what is happening in the markets and where the smart money is positioning themselves. So that's why it's vital that we are able to read the charts on a basic level to see exactly what is happening. So currently in the US stock markets, we have remained bullish. We have saved ourselves from the bear market closing below levels that would put us more into a larger decline. So the market still remains positive. Okay, taking a look at the US dollar, we see that the market did experience a pretty dramatic rise since May. The dollar bottomed out in May. Market was moving down. This is a chart of US dollar index, and the market has appreciated quite significantly since May. We did have a pullback over the last couple of weeks, but now we see that the buyers are starting to come into this market, and the market could go up further from here. Critical support is at 8,400 level, and resistance is at 8,700 in the dollar index. A market that has been getting some note recently is the oil market, and we have seen that oil has declined pretty significantly, which is favorable for consumers in general. And what we did have in the oil market is the market was in a consolidation pattern. Let me just draw the consolidation pattern. And what seems to have happened is that the market has broken below this consolidation pattern. This is the weekly chart of oil, and we see that the market was in a triangular consolidation pattern, and the market has broken down below this level, which is pretty good for the oil markets. Critical support, however, is down by this 80 level. It's more like 75. The $75 level will be critical support in the oil markets, and if we're able to close below 75, that could trigger further losses for oil. Okay, taking a look at the gold market. This is the cash gold, and we are in a consolidation pattern with gold. But for the gold bulls, what happened was that the market did test the all important. Let me get my drawing tool. The market did test the all important level that I have been speaking about near this 1180 level. As you can see, this chart extends back to September 2012, and this consolidation started in April 2013. And since April 2013, the market has essentially gone nowhere and is in a triangular consolidation pattern. Now, as you can see, the market hit the 1180 level and there experienced a slight bounce. The market came back down, hit the 1180 level back in December of 2013, early 2014. Market bounce. Now the market hit the level again in October 2014 and is bouncing. So as long as the market remains above this level, there is some hope for gold. But what we could see is that, some hope for the gold bulls. But what we could see is that the market could turn around and close below this level of 1180, which would be very bearish for gold prices. Actually, our investing system and our managed account is currently short gold, and we're short gold because the market has been weak ever since the high was made in July of 2011. So the right side of this market has been to the downside and selling rallies in the gold market. I would not become bullish in gold again. Let's say this level holds 1180. I would not become bullish until I can see the market close above this triangle and close above the 1400 level. And what that would tell us is that buyers have stepped back into the gold market, and then we could see a rise in gold. But until we see the market telling us that buyers have returned, I would either be short or stay out of the gold market. If you want to learn how to use these principles to advance your portfolio, if you want to learn how to use these principles that we're speaking about to experience higher rates of growth in your portfolio, you can go to smartinvestorcentral.com/webinar and sign up for the live presentations that we have that lays this out in great detail. The webinar presentation is absolutely free, and you will definitely learn something from it. It's smartinvestorcentral.com/webinar. And remember to join us on the podcast. It's smartinvestorcentral.com/podcast. And you will get the weekly analysis of what's happening in the markets. So I'm Beyond. Thank you very much for listening. And as always, happy investing. Thank you.